right, guys. Peace, 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 family. We are live, our Tulsa Talk Thursdays podcast. Myself and CCO of the Tulsa Real Estate Fund, Ernestine Johnson, joined by
Johnetta, Paye,
Esquire. Don't forget the Esquire.
Yes, Esquire. We have two attorneys tonight. President of the Tulsa Real Estate Fund. Sorry, I'm trying to multitask so we can get this started right now for you guys.
So Queen Johnetta Paye Esquire is our president of the Tulsa Real Estate Fund. Boss women in the building. Hello. If you don't know, now you know. We have our call. Everyone's joining on our conference call tonight. We're live from the Tulsa page, from Jay's page, from my page, from Facebook. So we are hitting you guys all across the board, and we're going to get into here tonight. Is Queen Jillian on?
She's not unmuted yet because I just sent a number.
Okay. So I'm going to give you guys a little background on Jillian Sidoti, who is our SEC attorney.
We have to do our introduction.
I was going to do her bio before we
did the new Tulsa introduction.
No, I was going to.
The Tulsa podcast. So this is also a podcast.
I said that.
On there. And so there's an official
Hi,
podcast
Jillian.
Oh, okay, well, I let the people know this is our Tulsa Talk Thursdays podcast, for those of you who didn't hear. Welcome. I am your CCO of the Tulsa Real Estate Fund, Ernestine Johnson, for those of you guys who didn't catch that the first time. I'm joined by our president,
Johnetta Paye Esquire.
Johnetta Paye
and
Esquire.
I think I heard Jillian Esquire on the line. Jillian, are you there? Jillian, are you there? I thought I heard you.
I am. I'm here.
Hi, Jillian.
Hi.
All right, so if you're tuned in live and you want to be on our call, please call in at 515-604-9995. And our PIN for access is 640076#. Again, the access PIN is 640076#. You can tune in or call in, and we're about to get into the nitty-gritty of this tonight.
And eventually, Jillian will be joining us virtually. She's on the phone right now, but we're going to get her up on the screen. We're working on that, but we're going to start tonight's show while we troubleshoot the technical issues.
Let her know I'm sending her another link.
And our tech, Eugene, said he's sending you another link, Jillian, to click to join.
Okay, thanks. All right, so I'll click off this.
Okay, so I'm really, really excited to introduce Jillian to everyone tonight. Many of you have had many questions regarding SEC, and Jillian is our SEC attorney. Jillian is one of the country's leading experts on Regulation A funds since the Jobs Act. Jillian has assisted multiple companies and entrepreneurs realize their fundraising goals through crowdfunding 506C and Regulation A. For several years, Jillian taught finance and accounting for the BS and MBA programs at the University of Redlands. So we thank you, Jillian, for joining us tonight. We've got a lot of questions for you tonight.
Yes, we do.
So we thank you for taking out the time. I know you're a busy, busy, busy lady, so we're very grateful to have you on tonight with our viewers and our callers.
And just two full disclosures, Jillian did help us with our Tulsa Real Estate SEC filing. And just because she's on the show tonight does not mean she endorses Tulsa Real Estate Fund, so we just want to make sure that that's clear.
Yep.
But I like you guys.
So are we going to... First and foremost, I just want to thank, before we start this, I want to thank all of our investors. I think I checked our numbers yesterday, and we were at how many investors? 11?
Yes. I don't know the exact number.
I know the numbers keep moving because you guys are just really, really rolling with us. So we're really grateful for all of our investors, all of our founders who are on and who've been on every Thursday. We thank you for the love, for the support. We're in this together. This is the People's Fund. This is our fund. This is not about Jay. This is not about me. This is not about Johnetta. This is really about all of us collectively coming together and showing the world and showing what unity looks like. And if unity doesn't look like this, I don't know what it looks like. So we're so grateful. We're so excited. Let's keep the momentum going. Tell a friend to invest, and really just, let's just continue to push the narrative to our friends, to our families, to our families of families, to our friends of friends, what investing is and how to break this generational curse so we can all build generational wealth. So we're going to get into these questions, Queen JP?
Yeah, so you want to kick it off with the first question for Jillian?
Yes, Queen Jillian, we have our first question tonight. What is a real estate crowdfund versus a REIT?
Okay, so a REIT is one of the most misused terms, I think, out there. A real estate investment trust is really a tax designation. You can do a real in the eyes of the law, what a REIT or real estate investment trust really is a tax designation. It's taking a C corporation, and for those of you that don't know, a C corporation traditionally is doubly taxed. That means is profits come in, the C corporation is taxed, and then dividends are paid out, and the dividends are then taxed at the investor level. In a real estate investment trust, the taxation only happens at the investor level, not at the corporate level, so you avoid the double taxation. Tulsa Real Estate Fund, and I'm not a tax expert, by the way, but Tulsa Real Estate Fund is not set up as a C corporation, it's set up as an LLC. Mm-hmm. So what happens there is that it has a partnership taxation, which means only the investors are actually taxed. The company itself is not taxed.
Gotcha. Did everybody hear that? Do you want to repeat some of that, Queen JP?
Right. So basically, the distinction between real estate crowdfund and a REIT is like it's a tax classification. Is basically what Jillian's explaining. And then as a real estate crowdfund, we're an LLC. So that's one of like the main differences between a REIT and a real estate crowdfund. But it's something that people have been asking us a lot, and so that's why we felt it was necessary to have an expert like Jillian on to help clarify that for the audience.
Yes, absolutely. So we're going to move on to our question 2. What is a Keyman clause? Why is there a Keyman clause in the TREF offering documents? Oh, Jillian, 1 second, Jillian. I think we don't have you on speaker. 1 second.
Did you lower it down?
Oh yeah, I did. Okay.
Yeah, she did.
1 second, guys. We're going to answer this question about a Keyman clause. What is a Keyman clause, and why is there a Keyman clause in TREF?
Star 6, unmuted.
Queen Jillian, you there?
Yeah, I am. I'm here.
1 second. We're having some difficulties again. 1 second.
No worries.
Sorry, guys. 2018. You know how technology is. Don't charge it to her. Don't charge it to her heart.
Okay, say something.
Jillian.
Yeah.
All right, you're back.
Here.
All right, we're there. So, okay, for you just tuning in, we have Jillian on the phone, who is our SEC attorney. She's an expert. She is answering the question: what is a Keyman clause, and why is there a Keyman clause in TREF? Go ahead, Jillian. It's on you.
So our key man in this situation is Jay Morrison, and a key man clause basically says, here's what's going to happen in the event that Jay Morrison goes away. And how are we going to survive? And so what you really want to do to protect yourself against that in a lot of ways, or what you could do, it's not absolutely necessary, is buy insurance. And you can buy key man insurance for that purpose.
Gotcha.
But does that mean, and so that's like, I think a misunderstanding that's common is that because there's a key man clause in the Tulsa Real Estate Fund SEC filing, that means that if something were to happen to Jay, we couldn't continue to do the business anymore.
Well, that's the great thing about the way we set this up. If something were to happen today, there are things in place so that the company can continue on. For example, if you look, it's the manager is not actually Jay. It's another LLC. So in the event that there's an untimely demise of Jay, for example, there are systems in place where the assets don't have to fall aside, or the business doesn't have to completely fall apart, because it's actually run by another LLC. And there's other folks such as yourself that can kind of take over.
Awesome. Thank you for clarifying that. So you guys hear that. If anything, God forbid, if anything were to happen to our founder, our CEO, Jay Morrison, your money's not just going to be in shambles. It's not going to be a waste. The company's not going to just die. There is a management team. So for those of you who don't know, that Tulsa's made up of a team. It's not just Jay Morrison. Queen Jonetta's on the team. I on the team. There's others on the team. So there is a team behind Jay. And so to clear up all the rumors and the thoughts that if something happens to Jay, then Tulsa Real Estate Fund just ends. That is not true. So thank you for clearing that up, Jillian. We're going to move on to our third question. What is the Securities and Exchange Commission, the SEC, and what is the function of the SEC?
The SEC is really, and by the way, if you haven't and you're an investor, I encourage you to go to sec.gov and check them out. The SEC is specifically created to protect investors. So what we went through with Tulsa Real Estate Fund was no different than what every other company goes through when they're trying to go public or sell securities to the general public like yourself. They go through a process of reviewing the document. Now, they don't endorse the document. They don't say that they did a perfect job. But they review the document with the eye of how do we protect investors. And that's what the Securities Exchange Commission, their reason to be is to protect investors.
Awesome. Thank you.
And how much like information do you have to like disclose? Because I think a lot of people in our village and in our community are new to real estate investing, so they don't quite understand like the function of the SEC. And the common understanding is that the SEC kind of is says like there's good or there are bad investments, and so or they give an opinion on the quality of like the company or the investment. And so can you just articulate a little bit on that?
Well, that's one of the big things is they never say that they endorse any investment, that they think it's a good investment, they think it's a good idea. Their opinion is that everything's a bad idea.
Because they're here to protect the investors. Yeah, absolutely.
Yeah.
Okay, and so that brings me to a question. I know that a lot of people have been commenting about Tulsa Real Estate Fund on Bigger Pockets, and you've been going into the comments and helping to clarify some of those comments. So what is your personal thoughts on some of like the comments and feedback that have been coming in on Tulsa Real Estate Fund?
Well, it's funny because I'm not used to this kind of
Muted.
abuse, I guess, or criticism. And a lot of people are very critical of Tulsa Real Estate Fund in particular.
Absolutely.
Having not read the documents at all, which is unfortunate. And one of the things I kept saying when people were making comments was, the best I can tell you is to read the documents. You need to read the documents. You need to read what was filed, what the intentions of the company are. One of the things I like to try to pride myself on is that I write documents in a way that are easy for the common man to understand. So if you haven't read the offering circular and you're thinking about investing, your step one should be is to read those documents. They're there to protect you. They're there, so that you do read them and you do understand the risks. And there's risks with all investments. And I think that's one of the really unfortunate parts of these people who are making, comments not just on Bigger Pockets, but on social media in general, that people are not reading the documents. They're making assumptions.
Yeah,
and,
absolutely. Education.
And that's always a dangerous thing to do.
And what is like one thing that you would want to educate people on that you've seen commonly in the comments or on social media that you think that people are interpreting incorrectly or not reading the documents?
Well, one comment that I found interesting was that the fees were too high, which I don't necessarily agree with. And because if you read a lot of different REITs or other real estate crowdfunding campaigns, you can see that there's a variety of types of fees that you can charge out there. Mm-hmm. And one thing I'll say, and again, I'm not commenting on, the value of the opportunity itself. I clearly wouldn't be representing a company I felt was not a reputable company. I hope everybody understands that. But one thing I'll say is that Tulsa's fees are not out of line with any other entity, real estate entity out there. As a matter of fact, they're charging less types of fees than most companies out there. They're only charging one fee, whereas many companies charge multiple fees. And so that is one of the good things about investing in Tulsa, as well as the preferred return that Tulsa offers, which is not always the case. Not all real estate crowdfunding campaigns or REITs offer a preferred return.
Unmuted.
Thank you.
And what is typically like the investment amount that you've seen in your experience to invest in a real estate crowdfund or a REIT? Like, what is the typical like entry amount that most REITs typically charge, from your professional opinion?
Yeah, I have one right
Muted.
now. It's like about $5,000 minimum. So that was another thing. And you know, Johnetta, I don't think I'm saying anything out of turn. Jay and I fought about that. Because I said, hey, Jay, $500 is really, really low. You're going to get a lot of investors. But, you know, he really believed in what he was doing, and he wanted to make sure that this was offered to literally all of his followers and that anybody could invest in this. So, you know, I went with the flow on that one.
I actually remember when we came to Vegas for the Crowd Converge conference, and we sat at the table and you came and you moderated, and we were getting a lot of flack there from people that attended about us charging $50 a unit, and everybody said it wasn't possible, we weren't going to be able to do it, and like you literally had to sit there and support the concept.
Muted.
I know, and I felt terrible about it because people were just beating on Jay right then and there. Like, you'll never survive if you're only taking $500 at a time.
Unmuted.
Well, we're surviving. We're here.
We're here.
Yeah, you're doing right.
We're
You're
here.
doing okay.
We're swimming. We're not sinking. Jillian, now I do have a comment or a question. You know, something that I read quite often, and you know, Jay and I are connected at the hip, so our comments are. So I see everything, I read everything, and there's this misconception or the comments that are floating out there that Jay's just going to take all this money. We're just going to invest. Everyone's going to invest into this Tulsa Real Estate Fund, and he's going to take this $11 million, and he's going to go on a lavish vacation and just live a lavish life. Can you speak to that? What are the penalties, or what could happen? And is that even possible?
Well, okay.
Muted.
If Jay goes and does that, I will be in jail for capital murder because I'm saying it here, I'm coming to kill him. So,
Unmuted.
Jay is not going to do that. There are
Muted.
people watching this money. That's why we have transfer agents. That's why you use Fund America, so that the money gets released into specific assets and not into Jay's personal, let's go to Hawaii bank account.
Yes.
Those are kind of the things. Now, there is no specific, escrow minimum or anything like that, and besides which we would have blown past that minimum by this point anyhow, but there are other third parties outside of this company. Now, does that mean that your money is totally and utterly, in the Fort Knox of real estate investing funds? Absolutely not. Again, read the offering circular. All the risks are there. But, Jay would go to jail for a very long time if the cops caught him before I did, because he'd be dead if I caught him.
Unmuted.
So I'm not, I want
Muted.
to know out there that the consequences are really severe if Jay were to do that, A. And B, the opportunity for him to do that is not quite there. There are a lot of parties involved in this transaction prior to the money getting released into an asset anyhow. And so it can't, the way it's set up through Fund America, it can't exactly just go right into Jay's account. The other thing I want everybody who is investing to be on the lookout for is to check regularly the Tulsa website.
Yes.
Check also the SEC's website and search for Tulsa Real Estate Fund, because that's where we go put our ongoing reporting requirements. And you will see, since the company went live, we've made several reports just updating investors exactly what's going on. Not just current investors, but investors who potentially want to invest. We have to constantly be vigilant in terms of reporting as to what's going on in the company.
Yep. Absolutely. So for those of you listening and tuned in,
Unmuted.
the Tulsa Real Estate Fund, it's not just Jay. It's not like Jay has this pot of $11 million for everyone who's just misinformed. There's third-party administrators. There's SEC attorneys. There's a team. There's a management team. Just for the clarity out there, for all the people out there a little confused.
Yeah. Yeah. No. And it's so funny. Like, I will say this again, not an endorsement to invest, but Jay is constantly concerned about making the right disclosures and making sure
Muted.
that the SEC is armed with the information and that the investors are armed with the information.
Yes,
that
absolutely.
When the money first started coming in, and there was this rush of capital through the doors of Tulsa Real Estate Fund, Jay called me probably 5 times a day. Just
Yes.
update me what's going on. Let me know. This is what's up. What do we need to do next? Should we be doing anything? Can I do this? Can I do that? And constantly looking for permission to do things. So he doesn't do anything that is just, fly by the seat of his pants. He has been I will say he's been very good about calling me and making sure things are being done and done right.
Absolutely.
Unmuted.
And I'm a witness. So we're going to move on. Thank you, Jillian, for that. We're going to move on.
We have a couple more questions because I have a few on my list that we
Oh,
haven't.
okay.
But you can go ahead and ask that one.
What is this a question or a comment?
We just talked about that one,
Okay.
but that was a yeah. And then you did that one.
Okay, so our last question for this list, Jillian, is what are the fees / costs associated with an SEC filing / real estate crowdfund approval process?
So I don't know. I'm not sure I know what that question's asking
So,
because that could be answered a couple different ways.
So, for example,
Muted.
you know how much we invested to get this fund started. So
I don't
typically,
know if you were going to say something else.
Unmuted.
I'm on mute.
No.
Jillian, can you hear me?
Yeah.
Okay, so typically, you know how much we invested to get Tulsa Real Estate Fund started. So typically,
Yeah.
what is like the fees that somebody who's looking to start a real estate crowdfund, what would they financially have to invest in the process? And what's the standard?
Oh, yeah, that's a great question. And again, this is in the Tulsa Real Estate Fund offering. You can read this. Jay probably spent about $75,000 to get up and running. My fee alone is $50,000. Then Jay had to spend money on a transfer agent and all the technology associated with trying to get it up and running, as well as an audit, and then also
Muted.
running the fund and assisting him with the day-to-day operation.
Yes.
Which we haven't accounted for yet because we haven't done a report, a financial report since going live. So once that comes out, you will see the money that's being spent. I saw some things about Jay investing $10,000 on the internet and how that wasn't a lot of money to invest. And I don't know where that number came from, but I didn't dispute it because the money that Jay did invest is recorded currently as a loan on the company, and that $75,000 I'm speaking of, and then his $10,000 on top of that was him actually buying units alongside investors. So
Absolutely.
I didn't want to confuse the issue by making comments on that, but again, can't emphasize enough, read your documents, because your documents will tell you all of this great information.
Absolutely. Thank you for clearing that up. So it's all there, guys.
Unmuted.
So, Jillian, it's safe to say that Jay Morrison does have skin in the game. Outside of starting the fund, starting with $75,000, he also invested, which he didn't have to, but he also invested into the fund and bought shares, as did I, as did Johnetta, as did the rest of our management team, all invested in this fund. So to the rumors or the people who think that we started with no skin in the game, it took money to even start this fund, and it took a lot of money. $75,000 just to even start.
But I think the misunderstanding is in our audit it says $15K, and so I think that people are assuming that 15K is all we put in. So can you kind of explain that or maybe elaborate on that a little bit?
Yeah. So the thing is, what the year end on the audit was. It might have been 12/31, but at that point in time, the money that had been spent at that point in time was only $15,000. But to get the whole entire thing done and through, and the audit and the marketing and all of that stuff, or not even the marketing, just counting the legal fees, the audit fees, and the transfer agent alone was $75,000. And so you will see that reflected in the financial statements eventually once those financial statements, our financial reporting comes around, and we have to put that up and out there.
Yep, absolutely. You heard it here. You heard it from Queen Jillian, our SEC attorney.
How long is that process?
How long is the process, Jillian?
The process with Jay was it was a little over a year, I think, and the only reason for that was because he was really trying to build the business in terms of what he wanted to do. Generally speaking, the process is about 4 to 6 months, but a couple of times Jay wanted to kind of look back and see exactly what he was doing and reassess the situation and make sure he came out with a product that was appropriate for his entire crowd. And he was very thoughtful of that. As a matter of fact, there were a couple of times he put the brakes on, and we were literally at the finish line, and he thought, no, I gotta look at this and make sure that this launches properly and correctly for the crowd. I will say that for sure.
Awesome.
Okay, that's great. So we just have a couple more questions for you, and then we're going to open the phone lines up and social media up for people to ask their questions of you. And we know we spent $50K to get your time, so we appreciate you giving some time.
You got it, girl.
Jillian, I just want to know, are you hiring or?
Okay, so our next question is going to be, so obviously investing in any real estate or any investment is risky. So how would you classify like the risk of investing in Reg A filing or REIT or any other type of investment?
Anytime you invest in something that is, it's brand new, which this is. Anytime you invest in something that has, initially no assets, which this did or does, you are taking on a risk. It is for sure a risk, but risk equals reward, right? So that's the concept. There's always risks associated with investing, and it can run the gamut in terms of from investing with somebody who has no experience, somebody who has some experience, someone who has a lot of experience. But if I learned anything in the downturn of 2008 was that even those with the greatest amount of experience still could lose capital. So, I think this is a game like most crowdfunding campaigns where you have to really believe in the vision. Yeah. And that's step one, and then assess the risk. And is the risk worth the potential reward for you? No one should be investing money that they cannot afford to lose. I cannot say that enough. And if you'll notice, for those of you that have invested or have attempted to invest, you actually cannot even invest more than 10% of your net income or net worth. So those safety measures are in place to protect you. First of all, they're legal safety measures, but they're definitely put in place by the Securities Exchange Commission and by Tulsa Real Estate Fund to protect the investors. So, if you cannot afford to lose the money, then don't invest. But there is some satisfaction in the fact that Jay has a certain level of experience and does have a presence where there's safety in numbers. The more people that invest in this, the more diversification there potentially can be amongst properties.
And is there anything abnormal or out of line with the risk clause that we have in our SEC filing?
Say that again. I'm sorry, Johnetta.
Is there anything unusual about the risk language that we have in our SEC filing?
Oh, from anybody else? Oh, absolutely not. No. I mean, if you read through SEC filings, and you will probably see that I go overboard in terms of our risk factors. I always have, and I always do, and I always will, because I think it's better to over-disclose than to under-disclose, to tell you that the sky is falling and you're all going to die, rather than to, look through the world through rose-colored glasses.
Yeah.
I'd rather just be the Debbie Downer of the group. And sometimes that scares off investors, but the savvy investors will realize that these are the risks associated with investing. But there is absolutely nothing unusual about Tulsa Real Estate Fund compared to any other real estate offering that I've put before the SEC.
Thank you for clearing that up.
Okay, and then do you want to explain, because you kind of hinted on it a little bit, do you want to explain the difference between an accredited investor and a non-accredited investor, and how the Jobs Act changed that?
Sure. So an accredited investor is a person who makes at least $200,000 a year as an individual, $300,000 a year as a married couple, or has a net worth of $1 million exclusive of their primary residence. And those folks are not as protected under the eyes of the law as non-accredited investors. Non-accredited investors are basically everybody else. And so the Jobs Act, with the augmentation, if you will, because Regulation A has actually existed for a really long time, but the Jobs Act itself augmented Regulation A in a way so that more unaccredited investors could invest in deals like Tulsa Real Estate Fund. And so it allows unaccredited investors to invest up to 10% of their net worth or their net income into Regulation A type of offerings like Tulsa Real Estate Fund.
Okay, and then when we were putting together our marketing strategy for Tulsa Real Estate Fund, we called you and we said we wanted to state that we were doing an IPO. And you were like, okay, that's cool. So I understand that maybe we didn't use IPO in the traditional sense, but is it still applicable to how we initially raised your fund?
So basically it is a public offering. It's not an initial public offering in the traditional sense that we didn't file what's called an S11 registration statement. The difference between a Regulation A and what you would consider a traditional IPO is that the reporting requirements and the burdens on Regulation A companies are less than those on an initial public offering type of, a traditional initial public offering, or what we know as a traditional initial public offering. But if you read the very first line of the Tulsa Real Estate Fund offering circular, it says right in it, we are providing the disclosure required under Form S11 of Part 230. It says all this mumbo jumbo. That doesn't really make much sense. But that's purposeful, because what I'm doing is I'm notifying the public that I am giving you the same disclosure as if as if we were conducting a true initial public offering. There's two different ways that you can submit a Reg A. Doing it as an initial public offering, or doing it on what's called a Form 1A form. The Form 1A form, I feel, does not provide enough disclosure, so I have elected to provide it as an initial public offering. Being a Regulation A company, however, doesn't force the company to report every quarter. Instead, the only requirement is to report every semi-annual period and as major events happen. So that is the route we have elected to go. And this is a good thing for investors, because the less the company spends on audit fees and accounting fees and legal fees, the better it is for the investor. So that's why I like Reg A so much. That's why it is okay for you to say it's an initial public offering. It's an offering that is offered to the public, and we actually wrote it as an initial public offering.
Nice. Okay, and I just have one more question. From your professional experience in the industry, how much do crowdfunds typically raise?
I was gonna ask that.
Oh, not as much as you guys. You guys, I mean, it was phenomenal to see what happened with Tulsa and how much money you guys raised in the first couple of the first week there. It really depends. You'll have some that will raise a lot of money and do really well for themselves, and then you'll have other companies that don't raise anything at all. I mean, I've literally seen real estate companies, who have raised absolutely $0, or they put some ridiculous minimum and they never reached the minimum and had to shut down.
Wow.
So it really can run the gamut, and I feel bad for anybody who's invested in one of those Reg A's that then shut down and just returned your money. And I actually have invested in 2 of those at this point in time, where my money was returned because the founders couldn't get it going, or had some other thing happen where they had to give all the money back. So it's not just about great legal work. It's also about having a team and a business plan that appeals to the crowd, and that can actually perform.
Yes, absolutely.
And we hope that we're back at the conference next year to talk about our success after everybody gave us such a hard time. But we're going to open it up for questions now.
We're going to take questions from the phone.
Or social media.
All right, guys, we are taking questions from the phone and from social media, from
Good
Instagram,
evening. This is
Facebook.
Woodford Young calling from Atlanta, and I looked at the statement for the Tulsa Talk firm and was interested in seeing the word fighting gentrification, and I'm hoping that preserving our historic African American neighborhoods. And I'm wondering, what is the end game for raising this money?
So the end game for raising the money in the fund is to enhance our communities and redevelop urban neighborhoods. And that was like the sole purpose of the fund from day one. And so that's what the funds are intended to be used for, to develop real estate assets in urban communities so that we can start to reverse gentrification.
And come back.
Next question, Queen Tamara. We got one from social media. And then also, you guys, like I said, Jillian just said her fee is like $50,000. So any question you have about just investing, real estate crowdfunding, like this is your opportunity to do this, because you will not, you're going to have to make the investment yourself to get this opportunity. So capitalize on that. And Jillian's on the line to answer like those questions.
Somebody asked.
Okay, I'd like to, while we're waiting for another question, I just want to interject. One of the comments I saw, or, there's some YouTube videos out there that talk about how, there's no asset company. And if you read every single real estate offering, not mine, not just mine, any real estate offering filed under Regulation A, I can almost with 100% certainty say that 99.99% of them start off with absolutely no assets whatsoever. Because if you have an asset on the line that's time sensitive and you're waiting for a governmental agency like the Securities Exchange Commission to approve your filing, you could be putting that asset and your investors at an unreasonable risk. So there are very few real estate offerings that talk about a specific asset or put the assets in place prior to getting approved by the SEC. So for any of you that have a question as to why doesn't this company own any assets, that's the reason why. This is how these things are conducted and done.
You heard it here.
Daniel Lee asked, how's the property search going?
For those of you who may not have heard, Daniel Lee asked, how is the property search going? And the property search is going great. We're getting deals in and out, and Johnetta gets deals daily. I get deals daily. I actually just went with someone from our team, Tosin. How do you pronounce Tosin? Adewale. Tosin Adewale and I just went yesterday and searched a property, a very creative deal, actually. So the search is going great. It's just about finding the right one that is going to make sense for our investors, and that's what we're intentional about.
And Jillian, what's the process? Can you educate our audience on why we can't be too specific about deals that we're vetting and looking at?
Well, the minute you start talking about deals that you're vetting and looking at, the SEC wants to know more information, and you could potentially subject those deals to an audit by the SEC. You don't want to be auditing deals that is incredibly expensive that you aren't actually going to close on. So if anybody out there who knows the real estate game often is played by, wheeling, dealing, trying to find deals. Sometimes things fall out of escrow, and God forbid you spend a ton of money on auditing a particular deal, and then you don't even have the opportunity to close on it. That would be incredibly unfortunate. So that's why you don't put those deals in there. And then another circumstance could be, say you have a closing for a property in 4 months, and the SEC takes 6 months. If you tie that property up in that Regulation A offering to be approved by the SEC, God forbid you lose your earnest money deposit because you can't close in time because the SEC didn't work fast enough to get you qualified. So it's things like that and reasons like that you don't say, here are all our properties, this is what we're going to buy.
Right.
So please, SEC, approve us. You're just opening yourself up for massive criticism at that time.
But no, we are property hunting. We are searching. We get deals daily. We're vetting deals. Our team is out there. So no, we are working. Next question on the call.
Or social media.
Anybody on social media?
Hello?
Hi, how are you?
Hi.
Hello? Hello, yes. I'm Terry. I'm from Atlanta, and I'm a current investor as well. And I was wondering if Jillian can speak to when I invested, I wasn't familiar with the bankruptcy and the pending lawsuit or the lawsuit that he had in the current bankruptcy. I was wondering if she could speak to why that wasn't included, because had I known about that, I probably wouldn't have invested. So if she could speak to why that wasn't included in the SEC document.
Oh, yes, absolutely. So I have received information. I can't talk too much about it. I do have actually an ongoing report that's coming out to talk about that. And if you would not have invested had you known that information, then I absolutely encourage you to ask for your money back. Don't sit there and have regrets because you feel that something should have been disclosed and it was not. So yeah, there's reasons I can't exactly disclose here, but there is a report coming out tomorrow that is going to be discussing it, and one of the reasons why it wasn't disclosed was because there was a settlement negotiation going on and we didn't know how that was going to turn out.
Awesome. Next question on the call.
Hello, good evening.
Hi, how are you?
Hi.
Hello?
Yeah, I'm here.
Yes, this is Eddie from Florida. And there seems to be a lot of questions from people that are not even invested in this fund. And there seems to be an awful amount of time dedicated to them. And is there any reason why you should be devoting a lot of your responses to them as opposed to those that have invested?
Why are we giving more time to people who haven't invested versus those who have?
Go ahead.
Go ahead.
So we do offer Tulsa Talk Thursdays as an opportunity for those who have invested to have open and honest dialogue with us. So that's how we do communicate with people who have invested. We also send out regular email blasts to let investors know. And our private Facebook group is another way that investors can directly communicate with us and communicate with each other. So we do have other channels of communication where we definitely focus on communicating with our investors.
And I would definitely say we have a very strong.
Hi,
I would say we also have a very strong social media presence. We're very reachable. I mean, Jay's always answering comments. I'm always answering comments. JP's answering comments. Avery's answering. We're very accessible. We're very reachable. We are always answering comments, questions, inboxes, DMs. We're very communicative.
Hello?
Yes.
Yes, my question. Hello, am I on?
Yeah.
Yeah, I can hear you.
Okay. Yeah, so you guys kind of spoke to this earlier, but I just wanted to find out what is the time frame on closing on your first deal, as well as are you guys looking at commercial deals as well, or only residential?
So we are looking, or we're hoping to close on our first deal by or the Black Wall Street Ball, or be able to officially announce them and present them at the Black Wall Street Ball. So that's
which is August, for those of you who don't know.
So just a few short weeks, few short months away, but that's our tentative timeline.
And we are looking at commercial and residential.
Yeah, and we're looking at commercial, residential, agricultural. We're open to all different types of property.
Next question.
Next question.
Anything on social media?
Somebody said since I missed. Hold
One
on,
second, King.
Hold on 1 second, King. Somebody on social media asked because since the first round has ended, am I still able to invest? And has the price went up, or can I still invest with a minimum of $500?
Great question. Thank you for asking. You can still invest. We are capped at $50 million. So until we reach our $50 million cap, then you can invest. The price is the same. The preferred returns are the same, and the 50% prorated share of your profits is the same.
We'll take the caller.
Hello?
Hi, you're here. We hear you.
Hello?
I can hear you. I don't know if anybody else can hear you.
Yep.
Yes, yeah, I have a quick question. My question, I'm first of all, got it, before June 19th, first day actually.
Nice.
I've just been paying attention to a lot of comments and critics, et cetera, and I just want to know, and I would like to, attorney, answer this if you could, as well as you guys, your experience. Has any other crowdfund had to, go get as much critics and, negativity and educating, or it's just like first time? Kind of crazy things that I'm seeing. I don't really think people are realizing how much blessing is there, to our community. So, is any other crowdfund has experience?
I've never seen anything like this in my life. I can't believe the criticism that this company is getting. And but that was actually one of the only. I want to be very clear. I don't represent the investors. I represent Tulsa Real Estate Fund, and I don't endorse any type of investing. But I only agreed to do this because I thought there's a lot of ignorance out there, and I felt that was completely unfair. Not just to Jay and his team and to Tulsa Real Estate Fund, but to the investors who did invest. It's not fair to be critical of their decision to invest. A lot of people are pulling out, and I'll say this, not only are people not reading the offering circular, but people who are reading the offering circular are holding it into a vacuum. Some of the risk factors and reading those risk factors out loud as if Jay and Tulsa Real Estate Fund are the only ones subject to those risk factors, when in fact, a lot of investment opportunities are subject to those same risk factors. So, no, I've never seen so much anger about a real estate fund in my life.
Yeah.
So thank you. I just want to say, you guys keep going. Block out the risk.
Thank you. We appreciate that. We plan on it.
We got a good question from the social media. Somebody said, isn't the 5.5% management fee kind of high? I guess this is.
I can.
Okay. So I've been investing for a while in different forms of investing.
No, hold on. We had
King on the phone. King, on the phone. Can you hold on 1 second so we can address the social media question, and then we'll come to your question? So Jillian, you want to answer about the management fee?
Oh, I didn't hear it. What was it? I'm sorry.
Somebody from social media asked, isn't the 5.5% management fee kind of high for industry standards?
I would say that the 5.5 fee itself is probably higher than other fees, but conversation, they're not charging any other fees. See, normally what you would see in a fund like this is you see an acquisition fee, a disposition fee, a construction management fee, an asset management fee. You see all of these fees being charged, and in lieu of charging all kinds of fees that add up, Tulsa's just charging one fee. So that's where the difference really lies. And they they also have the 8% preferred return, which, by the way, one of the comments I saw on social media was, oh, it's guaranteed. There is no guarantee.
No, absolutely
not. It's not guaranteed. It's preferred. You get paid before the company.
Yeah, and I don't think any investment is guaranteed. And Queen Jillian, could you clarify just for me, knowing that we do have the 5.5%, whereas other funds have multiple fees, would you say on average that all of those fees combined would come out to probably similar around to our 5.5 management fee?
Exactly. As a matter of fact, I think there was one gentleman who saw that fee and didn't realize that you weren't charging the other fees, and then thought you guys weren't charging enough. So it can go either way. It's like you guys will only do well if the fund does well. So,
yes.
And you'll only get paid if the fund gets paid. That's how that particular fee is set up. It's based on success. So if you read it carefully and read what it says, if the investors lose money, the management does not get paid as much.
Absolutely. Thank you.
King on the phone, we'll take your question.
Is there a reason that we use the term IPO versus a direct public offering or DPO?
You're absolutely correct in saying that a DPO is a more proper term, because an IPO usually infers that it is an underwritten offering, and this is what's called a self-underwritten offering, which means there's no broker-dealer, there's no broker-dealer, there's no underwriters, there's no investment bankers. So yeah, you're right. IPO, just like crowdfunding, however, is a term that is easily understood by the general public, but technically, sir, who's ever asking the question is clearly very, very educated, because you're absolutely correct. It is more of a DPO than an IPO.
Okay, so all right, so it's for crowd understanding.
Exactly. Mm-hmm.
Okay.
So we're going to take 2 more questions before it hits 9 o'clock, just to be respectful, because Jillian has a family that she needs to get to. So we're going to take 2 more questions, and then we're going to wrap it up.
We don't want another invoice in the email.
You're not going to get another invoice.
Anybody on the call? Another question?
Yes, good evening. This is Bill.
Hi.
Hey, Alan. I wanted to know, since Fund America, is that the only, company you use for your crowdfunding, or is there others?
Right, so Fund America is our escrow agent. That's who we selected to be our escrow agents. There's other companies out there that serve as escrow agents, but after doing research, we decided to go with Fund America. And Jillian, do you want to explain why crowdfunds need to have an escrow agent?
A crowdfund doesn't necessarily have to have an escrow agent, but it creates another layer of protection for both the fund itself and for the investors, so that your money is sitting somewhere with a third party prior to being deployed in an asset, so it's not just being sitting in the company bank account and hanging out there. And it gives Jay an opportunity and his team to evaluate all of the subscription agreements and make sure that he is accepting subscription agreements in the proper form, that the subscription agreements were filled out correctly, and it gives him that opportunity to do that without and puts kind of a little wall between the investor and the fund, so that all the I's can be dotted and the T's can be crossed.
Thank you.
All right, so our last question of the night is, we'll take one from social media and one from the phone.
Well, I don't know if this one counts, but Charles is just asking, how can I become an investor?
No, Charles's question does not count, but EJ will tell you how you can become an investor.
Yes, to become an investor with us, please go to visit our website, TulsaRealEstateFund.com. That's TULSA, as in Tulsa, Oklahoma. TulsaRealEstateFund.com. Open your account, and you can start investing right now.
The only way, no PayPal, no
There's
nonsense.
yes, and just to address that, there's been plenty of people mocking the Tulsa Real Estate Fund, a lot of fraudulent pages, a lot of PayPals, a lot of Venmos. The only way to invest in the Tulsa Real Estate Fund with us is by going to our website. That is the only one way. There's no other way. If someone sends you an email and asking for a Venmo or an invoice or a PayPal and it's fraudulent, the only way to invest with us is www.tulsarealestatefund.com.
And Jillian, have you seen that happen frequently in the funds that you represent?
Never. There's a lot of new territory here for me.
We're the first. We're the first. We're the first for everything.
Yeah, that's right. I just can't. I can't even understand how hard you guys all must be working right now.
So we'll take
Hello?
take another
Hi,
caller.
I'm here.
Yes, hi. I wanted to know if the 5.5% is a one-time fee, and also this is probably a crazy question as well. What is the turnaround time before seeing an investment?
Can you repeat your question again, Queen?
Yes, it's the 5.5 fee a one-time fee, and also when is the turnaround time before seeing an investment?
So there's a lockup period of 12 months before there'll be a return, but that's assuming that the fund is profitable in 12 months. Then we'll be able to pay the 8% preferred return and the 50% split of the profits quarterly. And then I think I missed the
5.5.
Is it 5.5 a one-time?
management. Yes.
Okay. All right. Thank you.
Was that our last
Social
caller?
media, and that's it.
Anything else? We need one last question from social media.
One last comment. Walter Wayne says, I'm invested in another fund. It has a $5,000 minimum that has now been decreased to $1,000 minimum, and they don't do this kind of education, only the SEC filing.
There you have it.
So, Jillian, before we let you go to get to your family in sunny California, is there anything you want to say to our community before we let you go?
Yeah, just keep checking the Securities Exchange Commission website, the Tulsa Real Estate Fund website. Make sure that you are fully informed before you invest. Read the offering circular, and also read the ongoing report. And don't rely on that information, the information you get from the management team of Tulsa Real Estate Fund. Do not be relying on the information you make on the internet.
Your due
not
diligence.
always accurate, believe it or not.
Well, thank you so much, Jillian, for participating in tonight's call. We definitely
Yes,
appreciate
thank you, Jillian. We love and appreciate you.
Oh, you're very welcome, ladies. Have a great night.
You too.
Bye.
All right, guys, thank you for tuning in to another edition of the Tulsa Talks podcast. We are closing out. Please keep up with us on Instagram, YouTube, Facebook. Are we on MySpace? Are we done with that? Tulsa Real Estate Fund on all platforms. And to invest with us, open your account today and start investing with us. Be a partner with us, with Johnetta and I, with Jay, with our team, TulsaRealEstateFund.com.
And also let them know about the Black Wall Street Ball.
Black Wall Street Ball. Yes, we're so excited. We are having our second annual Black Wall Street Ball here in Atlanta, Georgia, August 17th, which is King Marcus Garvey's birthday. So it will be August 17th every year in honor of our King Marcus Garvey. Come hang out with us. And not only will we have a ball, we're kicking off a whole Black Wealth weekend. We'll have a 2-day conference, the J. Morrison Academy Conference, starting with our ball Friday night, Black Wall Street Ball. Go to www.blackwealthweekend.com to come hang out with us August 17th weekend.
And then definitely tune in for next week's Tulsa Talk Thursday. We're going to continue continue our Crowdfunding 101 series, and we're either going to be talking about how we build and sustain Black Wall Street, and so we're going to have like a community city planner on so we can talk about how we can do that. And there's other topics along the way, so we're not just always going to be talking about the critics and all that.
Yeah,
but,
I'm done with it. We're done with the critics.
We're done with that. We've educated
Jillian came on. If that wasn't enough, we don't know what to tell you. We're moving on. We're focusing on the success of the fund and how we're moving forward and these properties we're about to get.
Amen.
All right, guys. Happy